The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 28th terrific Tuesday edition of today's Trader's Edge show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow down 18 points at 20,819. S&P off 6 at 2363. NDX 100 off 19 points. Composite is off 33. Russell is the big leader to the downside of 1 2/10%, 17 points to the downside. It cannot make up its mind what it wants to do. The semiconductors, the SOX, it's off 11 points. Also, just slightly more than 1% to the downside. Not much damage in the New York Stock Exchange or Wilshire 5,000. Gold is down $2. No big deal. Silver up 5 pennies. Light sweet crude off 72 cents. Leading the charge here to the upside dollar-wise, you got Priceline up $101. Is that right? 101 buckaroonies. Priceline, I believe that is correct. That's a move out there. That's up 0.6%. That's pretty substantial. Kite Pharma is flying its kite today, up 22%, $12 and change. Heska Corp, up nearly 10%. Alby Marble. Boy, I am sure that I totally have blown that. But if not, then I don't even know how do you come up with that? Abby Marl. A-L-B. I don't know what the heck that name is, ALB, but it is up 10%. Yes, SR the Butcher, no question about that. NetEase out there, that's up 1%. I got that one right. AutoZone, I can get that one 0.2% to the upside. To the downside, you've got Stone Energy down $30, 82%. Can't be. But must be. These numbers don't lie. Perigo Company down $11. Target off $8, 12%, making the big news of the day out here. But let's start by taking a look at, I don't know, what do you want to take a look at? Let's look at the markets out here. Let's figure out what the markets are communicating to you and I. Earlier, when we saw the markets just crushed to the downside, I don't know, Dow was down 40 or 50 points out here. You know, let's start off by taking a look and keeping all this in perspective out here. ES Mini, upper left-hand side, daily chart we're looking at. NQ, upper right-hand chart. Lower left is the Dow. Lower right is the Russell 2000. Now, what should happen is that we should say the ES Mini pull back to about 23.43. The reason that I say that is because the brand new box that formed out here with the daily point of control, let's go ahead and explode this up, being closer to the top of the box. Top of the box, by the way, is 23.70. Doesn't mean that price can't hit 23.70, 75. But what this does mean is that sellers should be in this price range, should be in control of this price range between 23.43 and 23.70. What you want to do is, this doesn't mean you exit a trade. It means really at this stage of the game here, any move. This may not be anything more than just a sideways retracement. Now, 35-point move or so to the downside. The mini that would seem like, huge correction, top is in, all that stuff. I don't think so out here. You've got to start really breaking other levels of support out here. What I would be paying attention to, believe it or not, and even with the VIX index trading higher and it being above the 50-day exponential moving average, we're going to probably just kind of stick that on the curb right now. I mean, we'll pay attention to it, but it's, how you sometimes take some old trash out to the curb because it's just stinking. At this stage here, that is one of these little stinkers, little stink bombs out there. In any event, if you see the ES Mini get above 23.70.75, because this is more of a bearish biased message out here, it'll just tell you just how super strong the markets are. Not that you need me to tell you how super strong they are, but this would be another indication. Pull back to 23.43 would be normal out here. Now, inside of the NQ, it's boxed, and I would have to say that in this case here between 53.61 and 52.80, it's kind of even Steven. The center of that box is really, it's not right directly in the center of that price area, but close enough to say it's not giving you an eye a clue. The indice that has been on fire certainly has been the Dow. We can see that it's brand new profile also is a bearish biased profile out there. So the numbers to be watching inside the Dow equity futures contract, 28.34. You close above that, it is off to the moon. No matter how much money you paid for that ride. To the downside, you want to watch support at 26.70. That's a couple 100-point move to the downside. People will be saying it's over, sayonara, adios, all of those expressions out there. I don't know. Now, with regard to the markets, what they've done here in the short term, this is the ES Mini. This is a 60-minute chart. What you're looking at, these horizontal lines, when you start to get above all-time old resistance, right, you're into new territory. One of the best tools to help us identify where price is headed to, the yin and the yang, whatever that means out there, is to take a look at these horizontal trading ranges. Now, this happens to be a 60-minute chart that you and I are looking at. And the gold, the SAR gold, these gold horizontal trading range levels identify typical price boundaries. Do they work all the time? No. But do they work most of the time? Yes. Remember, it is the body of the candle that is the essence of the price out here, as essence of price. These horizontal lines are based on the bodies of the candle. They are not based upon the emotional intra-bar time period out here. So 23.61 is a key level of support. As I watch the ES Mini crack down to the low, it got down into about 23.57 or so out here. Yeah, horizontal line, 60-minute horizontal trading range boundary lines, Mr. Bill. I said to myself, this is going to be interesting. Let's see if this, in fact, the 23.61 level acts again as a real level of support when the 60-minute time frame is done. And take a look at this. Take a look at how price just closed right there at 23.61. Now, so what does this mean, Steve-O? Means that is a significant level of support, intraday trading out there, something that you want to be paying attention to. And this says there's no reason that I can see that the ES Mini shouldn't bounce all the way back up to 23.68, right up back to the top out there. Look, when we get back from this break, we'll continue to tear this market apart as much as we can. We'll give you numbers to the upside, numbers to the downside, but I'd like to hear from you. Whether it's by hook or crook, by phone, by text, by email, by pings inside the Tiger's Den. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 17, S&P down 6. So Tom writes in, good afternoon, Steve, and good afternoon to you, Tom. I know you absolutely hate this ticker, but I jumped into this the past few days and wondering what your thoughts are. Long at 445. Now, that ticker, and you know there's only one ticker that I hate. Now, in perspective, I don't hate it with regard to intraday trading, and you know what that is. That is the VIX ETN TVIX. And basically, I hate them all from a long-term holding standpoint, but intraday you can find ways to trade this. Now, if you are trading these vehicles, make sure that you know what it is that you are trading. In this case here, it's not the spot index, not the spot VIX index. In this case, it has, as of yesterday, just so you know what this exchange traded note is holding. These are live as of 2:27 at about as of the close. So there was $534 million dollars worth of the March futures contract and $300,000 worth of the April contract out here. So and then they had about $400,000 in cash. They got a lot of cash sitting out there. That's pretty significant. Actually, they have more cash than they do the April futures contract out there. As Artie Johnson would say, very interesting. Now, with regard to trading it, what do you do? What do you do? I think you just got to trade this from an intraday perspective. You say that you have got this, you're holding this for the last couple of days out here. Again, and this is really, it's a crappy trading system, but at least it is a trading system I can give you that works pretty well. How do you like that? Something that works pretty well, but it's kind of crappy out there. You pay attention. It's simple. It is a simpleton system out here. You go back and you test it yourself, and for whatever reason, and this is using the 5-day exponential moving average, which right now is priced at 467. As long as this vehicle is trading above it, price is coming back and testing it and bouncing off that line. For some reason, it seems to work. And when it acts as resistance, you don't want to try to take this to the long side out here. The problem is really trying to figure out, Tom, where's this thing headed to? Now, this is a daily chart out here. Let me do this for you. I like to help. I like to assist any way I can. Let me add to this the market profiles that are just simply going to change. Why didn't that work? Oh, I know why, because I really didn't hit the right button out there. They're going to change that. I changed the time frames out here. So right now, this is going to take a look at the daily. And really, Tom, I mean, as far as tools that we've got to try to figure this one out, I'll say that these TAS profiles and the 5-day is probably as good as anything. Now, on a short-term basis, so this shows resistance at 493, by the way. And you're trading right now at 480. But let's put this on a short time frame. Let's put this on a short leash. Let's put this on a 15-minute time frame. And so I'll give you a couple of different time frames for you to take a look at. And even using the 5-day on this works, or the 5-period, I should say, exponential average works pretty well. But I think when you and I looked at this intraday, we saw that these TAS market profiles were really a better tool to be used out here. And I believe it was going back into February 27th. I could be wrong out here, where we have both the bottom of the box and the point of control that match up at the same price. So this, you can see here, this is where our cursor's at. It tells you you've got a strong level of support. That was at 442. Turns out that was a very strong level of support. Then the next thing you're looking for, so that you've held this for a couple of days here, you want to take a look at where these next profiles form at. And as long as they continue to form at higher levels out here, you're in pretty good shape. Now, the problem that you've got right now, compadre, is that the profile that just formed out here as we came on the air at 1 o'clock happens to show that point of control, that little cyan-colored level. Let's get rid of price out here, closer to the top of the box. This says that it is really sellers in control of the TVIX between 490 and 470 out here. Prices trade right now at that point of control. That sort of makes sense. It's actually below that level. So it would not be unusual for this thing to get down and test 469. You said you are at 445. That's trading at 479 right now. Because of this box, and I'm just using a 15-minute time frame, no idea what it is that you are looking at time frame-wise. What you want to see to stay in this trade is you'd like to see this thing get above 490, because then a bearish biased pricing area will have failed out there. Otherwise, expect price to come down and test the level of support around 469. So, Tom, I hope that helps you out. And no, it's not my I absolutely hate that ticker symbol. It just has to be traded with some excellent tools out there, and not for folks. I get emails often. I get a lot of emails, just like 1,000 a day at least, if not more than that. Unfortunately, most of them are junk. But many emails asking why shouldn't someone with the volatility index being so low, why shouldn't someone take a long trade for a long period of time on that? And it just doesn't work out there. We're not going to debate that one at all. So again, now the interesting thing about the VIX. So speaking about the VIX out here, we've taken a look at that, until the cows come home. But we do have the volatility index trading above its 50-day exponential moving average. Yesterday, closed above it. Today, continuing to trade above it. And all we have, if we net it all out right now, is an S&P that is down about 4 points. Man, when the VIX index typically, especially when it's coming and it's moving higher and it closes above that 50-day and then it continues to trade higher, you should see just major demolition. It should be a demolition derby out here with regard to a price decline in the S&P 500. It's got to make you say, it makes me say, something to think about. I mean, really, we should not be talking about the fact that the S&P is down 6 measly points after finishing up a couple of points yesterday. Not with regard to some of these tools and indicators. And right now, I can say as of 1:25 in the afternoon that with regard to the New York Stock Exchange, the NASDAQ Composite, almost the Dow, that it is sellers that are in control. And sellers are in control, and they can't do diddly out here. This is really a head scratcher of a market. I just say you've got to really be cautious on jumping to the short side of this market. It does not mean that all holy heck cannot break loose here, because it most certainly can at any point in time here. But really, you just have to take a look and say these are excellent trading tools out here. And this market just ain't going anywhere. It's not going anywhere to the south. Every dip gets bought intraday. It just does out here. There are levels that you can watch in the NQ, for example. All that move lower was doing out here was testing a hammer candle. This hammer candle took place yesterday morning about 10 o'clock, so that's a strong level of support out there. It's not exactly like it's out of the woods, so to speak, out here, but it is not a weak. It's not a weak link out here. I did mention the IWM, which is also a little bit baffling. This is why I like to take a look at the equity futures contracts, the intraday patterns out here, and rely upon them versus these ETFs out here. These are Tom. You think you're getting me wrong? These may be one of my least favorite tools out here. Just the index ETFs, not necessarily to trade, but with regard to the information they're giving you. Yesterday, you had the IWM up 28 million shares, moving into 21. Should have been testing the high today. Instead, it's trading lower. Steve Rhodes with TFNN. Good for it.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 19. S&P is off 7 points out there. You got to have a sense of humor around here. Okay, so Danny in Atlanta wanted to take a look at GDX. So, Danny, here you go. 22.97. up 14 pennaroonies out here. So, what does this mean? I'm sure that is the question out here. And do you want my real outlook out here? We have to. Let me try to first keep it simple for you. So you got gold back $5 right now. I think the key to this trade, this next trade out here, it's going to come here, and it may come overnight. So, okay, there's a lot of folks, many folks, I don't know whether they're right or not, thinking that, okay, the market's not going to do a whole lot until we have the old State of the Union out here. So let's go with that as the high. I don't think the State of the Union for gold, let's talk about that State of the Union. It's going to really be about price behavior. And the next move, actually, if you were trading the futures contracts or had access to trading the futures contract, may come this evening, depending on what we see take place with regard to Goldilocks. Now, what you would be paying attention to simultaneously, what you would be looking for is you would be looking for the Japanese yen to really, in this case here, trade below the price level 111.67. The actual low so far today, intraday, is 111.69. You got to love it. 69, 67, what's the big deal? I know there's a deal out there, but it's not that. But it's really important. And we can see that this level has really acted as support. So almost, I'm thinking this, just cracking through that level by more than just a couple of pips, but just really cracking through that level is going to be the indication that now you've got the yen getting stronger, the U.S. dollar getting weaker out here. And we know because of for the most part, correlation between gold and the yen, that then gold is ready to take off. I mean, topside in a huge way. On the other hand, if in fact the yen just boings off of this level here, finds support as it has for quite a period of time out here, then you're not going to see gold go ahead and take off topside. And then with regard to the GDX, Danny, then that thing could certainly pull back based on yesterday's volume. But I really think that the area of focus and probably the best trade setup, not the indices out here, just not they're just not behaving the way that they ought to behave. And we'll come back when they start doing that or start breaking levels of support. We come back, we take a look at that. But the next best trade setup could be this evening, could be early in the morning, if in fact you see the Japanese yen break through this level. Now, if that happens, whereas I can make the case for you that the mining equities should move lower, I am not going to make that case for you. I can make that case for you. Probably many others have already made that case, so there's no reason for me to make that case for you. Instead, what I'm looking for is the surprise here is that the yen gets stronger, in this case here, crushed on this chart, and then gold just simply takes off topside. Now, you may say, support that conclusion out there. And here is the little, now maybe John Logan covered this earlier. I don't know. I tried to tune into the show and then I got sidetracked and wasn't able to. And but here, let's turn off some of this stuff. This is this is something that is so subtle that says that may be what I just gave you really may be the deal as to what's going on. At least I know the reason that we should look for it, and then what to expect and anticipate. And then you just fire away on this gold contract out here. So here's what it is that we're going to look at. Not the A to B equals CD pattern. Not that we don't like to look at it, but what we want to look at here is take a look at this. Take a look at these market profiles. In fact, let me turn off the weekly. You guys tell me, did John talk about this? If you guys look at this, you each of you out there, you see what? You see and for those of you that don't see because you're listening on your mobile device, thank you for doing that, and I will explain to you. But for those of you in the den, on TigerTV, elsewhere looking in and seeing what I see, do you see what I see? Well, take a look at the brand new profile that formed today. Tell me what it is that you see about that profile that formed today that would say, man, this is super bullish out here. Exactly. Those of you that said, not guessed, but those of you that said, well, Steve, you have a brand new market profile and price is above that. The profile formed below price. It doesn't happen very often. But when it does happen that way, and just the reverse would be very bearish, this is a very strong message. So why hasn't it done anything? Well, it is just pulled into the gas station known as the US dollar Japanese yen out there. And it is waiting for its tanks to be full. Those tanks will be full if, in fact, that level of support that we looked at cracks. And then if it does, then this ought to really take off to the upside. And therefore, my conclusion is that the move lower in those mining equities was nothing more than a overdone washout trying to get rid of stops and so forth. And there was a lot of volume to the downside. I am not one that is ready to buy it. Now, look, we've taken all of our profits from all of our mining trades. I'm also not willing to step in front of this train out here. I'm hoping that this would have taken place by 3 o'clock when I'd send out a newsletter, and then I would say we're piling all back in out here because we got everything that we want. Unfortunately, that hasn't really occurred thus far. And that's why now I'm of the opinion this probably doesn't occur until the overnight hours. I have no idea whether it will or won't. That's the next place where I'm looking for this as a possibility. Will I be in front of my screen watching for that versus listening to the boob tube? The answer is yes. I want to see what the reaction is to traders out here. Look, if price gets back below 1245.80, then it's a whole different thing out here. But otherwise, I think we have got the strongest, most bullish message that we can get from a market profile that you could ask for that occurred today. And so, therefore, I'm like, wow, this is an opportunity, or should be an opportunity. And 1289, by the way, the one to well, that's not even that. Let me correct the A to B equals CD. I can see that somehow things must have gotten offline here while I was moving some things around here. The 1-to-1 A to B equals CD is 1278.40. Do you think that is where price will stop? Not a chance. No way. No way. No way. Yeah. 1304, maybe. 1337, more likely. But this is really potentially the trade setup. We just have to watch for a couple of those factors to come together for the Texas two-step. And like I'm sure everybody else is making the big deal about, well, just take a look at that volume coming out of the GDX. Hey, you got that right out there. Big volume to the downside yesterday, breaking through daily profiles out there. I mean, had I not been taking a look at that little nuance of that TAS market profile, I would have been in that same camp. I would have been here telling you, forget about it, right? Because you saw the GDX just taken off to the downside with 112 million shares, going into 135 million as the breakout. It's accelerating to the downside. I am not buying it. I will if the yen fails to break support. Then I will say, yep, you're right. And then Danny in Atlanta, the GDX, and this was the long story to get there, 2071 would be the level you'd be looking for. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Dow off 17, S&P down 6 points out here. So what do we want to look at next? Oh, I know. I had an email question that asked if the markets move higher, what are the next levels you'd be looking at? Because I was looking at intraday charts earlier. So it's an excellent question. Let's go take a look. I was looking at this earlier, so the question is certainly timely. If we take a look at the Dow, and again, we're back to weekly and monthly horizontal trading range boundary lines. These are the red and the green levels that show up on my screen. And as long as the Dow is able to trade above 20,716, then 21,981 really becomes its next target. 21,981 to 22,519. That's what I'd be looking for. Now, this is a weekly number that we're looking at. It's only early on Tuesday, but if it is traded above this 20,716, you're looking at another 360 point move to the upside, and 22,519 is not out of the question. Here's what we know as of 143. The Dow is trading above a key level of resistance. Inside the S&P 500, it's already broken above a key level of resistance. It did that a few months ago, really. 2227 was that key level, and 2451 happens to be the next area where this thing would trade to. You remember months ago when I would be calling for 2350 to 2450, and I would get emails and cards from people telling me I didn't know what the Sam heck I was talking about out there with regard to 2350. But we got the 2350 much faster than I thought. That 2350, that was nothing more than a 17-year consolidation pattern that broke, and it gave us a price projection that was the equal to-ish area out here. So 2450 was also in that range. That 2450, 2500 happens to be an Elliott wave, fifth wave minimum price projection. At this stage here, S&P 500, if it's up the S&P 500, it's heading to the upside. The NDX 100, this thing here, we're just looking at monthly horizontal trading range levels. 5421 becomes the next target. That's really less than 100 points to the upside, so that is no big deal. Not that I can't trade there. That is what I would be looking at. That's what I would be looking at as the next price levels for where these indices ought to travel to. Likewise, to the downside, there's numbers there that we would take a look at. First, I would be focused on the and the numbers to the downside are sort of irrelevant. Is that a word out here? Until we see the daily profiles that have formed on the equity futures contracts fail to act as support. So no reason for us to really spend too much time there. Okay, so let's go take a look at it. I don't see any other questions out here. If there was something in the den at one of you Denners had posted, you wanted me to take a look at it, and I didn't, would you just please repost it? Sometimes as things get written in there, it just kind of shifts to the upside, and I don't see it on my small little screen that tracks that stuff. I want to be able to get to anything you want to look at as well. So let's look at Priceline. Shoot, let's go look at Priceline out here. This little rocket ship up 100 points or more, 1735, and big volume behind this move out here. So where are we in Priceline? Let's put this on a monthly chart. Man, this thing is a rocket ship as well. The weekly base, last time we had volume was 16 million shares. That was back here on the trading week of November the 1st. In 2 days of trading, we have 8.8 million shares. So this thing is motoring higher. You might say, where is this headed to? And that's an excellent question out here. And I don't have an answer. Yeah. This thing is... It's not that it's parabolic, and there are some A, B, C, D patterns out here. If I were going to draw one in with regard to Priceline, I would probably, this would be my A point down here in October 2011, B point out here in March of 2014, C point out here in February 2016, and this gives Priceline a target of 1921. And I say that is not where it's headed to. The price projection target, you're at 1733 right now. I'd be looking at 2184 would be where Priceline is headed to. So we'll try to keep, as long as I don't delete this chart, we'll have those numbers, and we'll see if, in fact, it gets out there. Kite Pharma, KITE, is a ticker symbol, up 22%, $12. Volume behind this move. It's not at its all-time highs, but it's headed back up there. That's what this chart would indicate to us. That means it's headed to the 89-ish area. Let's put this on a daily chart. Big volume inside of this equity today, 5.6 million shares. You don't see that on any given Sunday. And as far as where is this thing headed to, it's back to its highs. How long, I don't know. But the $88 area is where this looks to be headed to. That is Kite Pharma. Heska Corp, HSKA. No, let's go into this one here, because a lot of people have given me a lot of information on how to pronounce this, and no one has given me consistent information, and that would be Al B. Marl. I'm going to have to go with Al B. Marl on that, even though it might be Albert Marl, or I don't know what it could be. But let's just take a look at this little sucker out here. This has got some good volume in it. 2.8 million shares today. Is this thing above its all-time highs? Oh, it most certainly is. Now, this thing here has a nice A to B equals CD pattern. This one is easy to go ahead and draw in here. Your A point is all the way back down in the lows in March of 2009. That sounds familiar. The highs out here that we would use would be, we'll just go ahead and use this high out here from May of 2011. And then down on October of 2011. This has already hit the 1-to-1, A to B equals CD, so 109.57 appears to be the next stop for ticker symbol ALB. You go ahead and pronounce it. Hey, let's take a look at Nutrisystems, NTRI. This is a stock I used to have in my personal portfolio back in 2005 timeframe. It was a big winner out here as this thing went from the $2, $5, I think it goes into about $10 or so, and ran all the way up into the highs back in May of 2006 when it got up into the $76 level. The interesting thing is, in about June of 2006, this was a stock I still held then. In June of 2006 was when I entered the Master Trader Series program with Tom O'Brien and brought with me my huge portfolio. I had, 70, 80 individual stocks inside of that at that stage out here. Nutrisystems was one of those. Well, it looks like Nutrisystems, take a look at the bar we have going on right now. This clearly is buying at the bar, and looks like this is going to head all the way back up to its highs again. 73 buckaroonies out here. Daily wise, what has this done today? Wide ranging bar, accelerated volume, and this is a momentum stock, and this has got mo to go to the upside out here. And that is Nutrisystems. So a lot of people must be buying those power shakes out there, whatever it is that they sell. Well, we know what they sell. they sell ways to go ahead and lose weight. Hey, who couldn't stand to lose a few pounds? Let's take a look at Stone Energy. Now, let's not take a look at it. It's getting stoned, and not the good kind. It's down 82%. That's $31 the downside. No reason for us to go take a look at that. How about the INC Resh Holdings? INCR is a ticker symbol. That's down 24%. That's taken just simply that's a bloodbath today. Interesting. It had a high volume high that basically was tested. 6.2 million shares. Yesterday was tested with 652,000 shares. Yikes. Talk about not having any volume at the highs. Now it's got volume headed lower. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow 16, S&P down 5 points. A question that came in by email said, Steve, you and Louis Navalier yesterday were taking a look at the energy sector. Can you tell me what you think about XLE today? And in fact, we were taking a look at it. In fact, that was one of the areas that he is looking to put on, add some positions on. He wasn't there just yet. And you know what? I'm not there just yet as well. And if we take a look at it, although it's off to a good start. So here, just look at the energy sector, XLE, and let's take a look at what we know about it. Then there's several things that we know. First of all, let's take a look at a test of a swing point out here. And for those of you that are in the Tampa area, then there's no reason for you to not join Tom for the workshop over at the Weston. It's going to be a great time, no question about it. In the case of the energy sector here with regard to testing swing points with light volume, you had a breakaway with 44 million shares. The swing itself had 18 million shares, and the last test was with 13 million shares back on February 24th. Yesterday was 23 million shares as it started to move higher. Now, we've got an inside bar today out here, so it's really a pause button. It's not giving us a whole lot of information, but we do have a test of a swing point, an area where things broke out from. So price came back to a breakout area, so that's number 2 with light volume. And yesterday, you have to call it a sign of strength, volume-wise, inside of the energy sector. So that is a plus out here. What we can see if we turn on our market profiles, and the market profiles are going to be lagging in this instance, but you'd like to have seen this be able to get above, its weekly point of control level out here, which is at 71.58, and it has not. You certainly want to see it get back into the daily, which is 72.14. If you get back, which is less than a buck away, 72.14, then this ought to head back for its highs. And maybe it is a change in trend. More likely it's a change in trend. Why would it be a change in trend out here? Well, it'd be a change in trend because it made one of those change in trend signals, confirmed it yesterday when it made a 7th wave move to the downside. Letter G. Stevie Wonder singing in the key of G. Nice bullish engulfing candle yesterday. But the problem is, and it is a big problema, is that price was not able to clear Stevie's red line, that being the price point right now today of 71.79. It needs to do that in order to convince me that a change in trend is underway out here. So I'll take that versus the profiles as a signal that things are underway. And if you go take a look at the energy sector in total, there are some better looking stocks. Here's the XLE. Here's all of the stocks that are inside the XLE, and some look better than others out there. In fact, this stock here looks pretty good. Let's take a look at Valero. It's given up some of those gains out here. So interesting. VLO is the ticker symbol, but it should be back up here. Take a look at what it's doing. It's swing point high. We looked at the energy sector, the XLE, testing a swing point low out here. Valero will have nothing to do with that. Its swing point that it is testing today, has 4.4 million shares. You have done 5.5 million shares at 157 in the afternoon. Valero, even though it's rejected the low of that swing point, 68.84, even if it doesn't close inside there, it'll be back up to test that swing point, at least 68.84. But more likely than not, Valero is trying to set up its next A to B equals CD to the upside. So with inside the energy sector, this one looks beautiful. It's doing what you'd like it to do. So it looks like this one's going to try to lead the charge, even though it's number 11 in the waiting sector. Folks, stay tuned. Your favorite polar bear and mine, David White's going to be up next. Tom O'Brien from 3 to 5. Andy Heck from 5 to 6. And I'll be back with you tomorrow from 1 to 2. Have a great Tuesday. We'll see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.